It is Friday of the last trading day in September. The market opened up with this nice little rally up here, and then the significant level of 43.30. Hit it twice and backed off of it. That is called a resistance. So when I talked about 43.30 before, I was talking about it as a support. So a support is when the buyers step in and it'll bounce off the 43.30, and I can't find the chart. Uh, so it was bouncing off the 43.30 for a while. Is this the chart? 43.30. Yeah. So it was bouncing off this level a few times, and now it can't get above this level. So the 43.30 turned from a support that it was bouncing off of to a resistance where it hit a ceiling and it can't go over. So that is a bummer. Hopefully, it could break through that soon. See, it bounced off of it twice and then never retested. It just tanked. But let's talk about something else. Let's talk about Amazon. ZN. Amazon. Amazon, we all know and love Amazon. Let me look at the chart. It's up about 1.4%. Is this the chart I want? Yes, this is the chart I want. So if you look here at this 110, so again, here's where it was kind of a support, and then it turned into a resistance here, hit, and now it's been well above this for a few months now. The 110 level is a good level, and then the bottom is at 80. So what does that mean? This one is a little more confusing. There's really no significant levels here that I can see. I had to zoom out or zoom in a little bit more to recognize these. So what does this mean? What can we do with these two levels? Well, first, since I don't typically trade Amazon because it's outside my price range, I like to stay under $60 a share. This is double that. This is double that. But take a look at this. Average price target 175. The high is 230, which is a 79% upside, and the low is 9%. These are both above the current level, which is good, but they still have a pretty wide gap. If you go to my rules, this gap I don't like to see too wide. That means it's kind of a confusing stock and people don't know where it's going. But it's all Amazon. I think they're only getting bigger. I think they're only going to take more market share. So I'm comfortable with these levels. That's a $90 difference. It's not that big compared to the high and the low, but it's still significant. You look here, they're all buys. Now these are pretty tight right here. 150 price target to 174. Those are a little bit tighter. And these are all relatively recent, last couple days. So pretty comfortable with those price targets. Like I said, we're dealing with 110, which is pretty far down there, and 80, which is way down there. It would have to lose 40% to hit that. So let's look at a trade idea off of this. Let me pull up my handy dandy E-Trade evaluation tool, trade evaluation tool. I forgot to log in before I started the video, so let me log in real quick. Power E-Trade. Power E-Trade is my favorite trade analyst tool, and I believe I did a few videos on it, and I use it routinely from time to time. All right, so here it is. Build strategy, Tesla, no, Amazon. So let's look at those two levels. Let's get my spread going. Let's do it for December. See what the time frame is. I'm going to go ahead and sell the 110 put. Okay. because I want to pick up shares at 110 if at all possible. And I could sell that straight away, but what I want to do is I want to buy the strike at the 80 level. And the reason why I want to buy the strike at the 80 level is, one, it's pretty cheap because it's way down there. But two, it'll protect me on the downside because this is a massive stock price. So I just don't want to put the put out there and then be holding on to a bunch of shares at 110, taking up a large piece of my portfolio. So since this is outside of my strike, outside of the strike prices I usually deal with, $60, I want to put this down here to so I can possibly get out of that trade. Because you remember, as this is tanking, this 80 will become more valuable. And this 110, if this triggers, I could also sell the 180, or I could use it as a backup to that. So let's see what I'm talking about here. Max profit is the 190. That's a put credit spread. This is what I put in my pocket immediately. Got an 80% chance of keeping that whole thing. Max loss is 2,800, which is the difference between the 110 and the 80 is 3,000, and then you add in this 190, brings it to 2,810. That's if Amazon drops below this 80, then I take that max loss. The break even is if anything below 108. So if this hits 108, it triggers the first one and doesn't trigger the second one, and I lose all my premium. So as long as it stays before 108, I'll make some profit, and that's 82%. And so I want to go ahead and execute this trade. Since I don't want to execute it on my personal account, I want to execute it in my business account. So let's see, December 110, 180, put credit spread. Let's go to here. Let's go to trade. Let's go to December. Where are my strikes? Strikes are right here. The 110, let's hit the 110. I'm selling the 110 strike. Okay. Selling the 110 strike. And where's my 80 strike? I have to expand this. Nope. Expand it further. Oh, okay. And it was at 80. No, so sorry, this is a put. So selling the put at 110. And I'm buying the 80. I hate when that happens. You have to hold down control, bro. Hold down control. And I'm doing the put here. Selling the put. So, selling the 110 put for December. That's a significant level. And buying the 80 put for a credit of this 190. So, let's go 195. Confirm and send. Because the market is coming in, then these will give me more credit as the market is declining. So even though this is stronger than the market, I think the market will pull it down a little bit. Confirm and send. And here's what I'm talking about here. The buying power effect is only going to be $500. That's it. I'm making $195 on $500. That's all I'm putting out for this instead of $110,000 or $11,000 to buy the stock outright. So that's my trade. That's my trade idea. Think it'll work out great, and I'm going to jump off.